there's just a lot of glowing buttons near me, and every time I press a button, it just does something weird. But let me know if you can hear this.
Oh, dude, that's
Can
so
you hear it?
sick. Yeah.
And then it lets me do some weird stuff like this.
Oh, you got voice modulators too. Damn.
But yeah, that's basically an unnecessarily overpriced little setup for episode 2 of a podcast that I need to keep consistent with. So let's see how that goes. Anyway, how have you been?
I've been good. I'm really excited for this. I've been going on the whole AI automation grind. Like this shit's moving so fast, dude. Literally, I was using OpenClaw. That shit got wrecked 3 weeks ago. Everyone's swapping over to Hermes. Things are just changing on like a day-to-day basis.
I mean, it is pretty insane because I've been looking into integrating Claude and agents into my supply chain workflow at the manufacturing plants. And every time I come across a problem and start thinking about a solution, the next week Anthropic just releases an update and the solution's solved. It's almost like every 3 days there's an update now, and it's hard for me to keep up. And how am I supposed to build on something when everything's just getting built for me, and I'm not necessarily sure how much effort I'm supposed to put in right now?
Dude, so true, bro. Like, now the layoffs are being crazy. We actually even fired pretty much an entire engineering team, and then just was like, we can do it with agents. And it's kind of crazy, like the shit we've been able to get done.
That is.
The fact that this thing can run 24/7. Like, the hard part is getting it like criteria that it can automatically pull and figure out like, okay, am I on the right track? But once you engineer that, this thing can just go. Like, I've been running this benchmarking task on my computer for, I think at this point, 2 hours or 3 hours, but like the fixes it comes up with is pretty sick. There's like super niche stuff, like the stuff that we're working on right now. You need to be able to like understand in how a message is being sent from a memory buffer, and everything's happening in like microseconds and nanoseconds. So literally, like the simplest thing of like, oh no, something like literally like a power surge could fuck up. Like a tiny power surge means like, oh shit, something's gonna fuck up and like the numbers will change. Or like it's cooler in the morning and you run the benchmark later in the day, and then that'll mess up the nanoseconds and stuff like that. Crazy.
How was your experience with OpenClaw, by the way? I did read an article about a certain data breach. Any sort of update on that?
Yeah, so OpenClaw, I think the biggest problem is with security. I saw this really interesting thing where some guy connected iMessage to OpenClaw, and then OpenClaw decided to text other people on his contact list and being like, yo, you can add me too. And then kind of went haywire like that. So the creator of OpenClaw went and did a talk at AI Engineer Europe, essentially talking about the security flaw. And he's saying that there are so many security fixes that are happening on the repo that at some point it's going to converge to it being secure. So he's just like, at this point, just the basic practices of having the accounts that OpenClaw uses to be managed and stuff that you can scrub out, and like systematically put things in. And like the places where it can break a vulnerability is like if you don't have the right hosting settings, if you're running it on the cloud, if you decide to add more than one person to the Telegram chat, if you try to use WhatsApp because you're using a phone number and that can get leaked, stuff like that.
Right. And what was quite surprising is how fast OpenClaw was adapted, but also how fast it was abandoned as soon as Anthropic released its own version. And that's what's quite shocking with a lot of these LLM companies, is that the pace at which they're able to replicate each other's work is almost shocking. And I think it's pretty apparent that everyone's shifting from OpenAI to Claude and Codex now, which is quite new to me. And it's actually the pace at which innovation happens within the AI industry that is far harder to keep up with than actually learning to use the tools for me.
Yeah. And the crazy thing is, it's like Gary Tan has this new notion now after he started coding and picking up the LLM stuff. It's like boil the lake, where before YC was like, pick a problem. How do you pick the right problem? You find a place that you are an expert in or have a lot of deep understanding of, talk to relevant stakeholders and identify which problem you want to solve and the different, and kind of pick 2 or 3 ways to approach the problem and then keep iterating up until you get it right. Now, Gary Tan's things like with LLMs, you just throw the problem and come up with every solution. You don't have to spend time trying to pick which approaches will win, but rather just make them all and see which one sticks. So now it becomes more of like, do you have taste? Do you have a good instinct to where to look for a problem? But you don't need to have like super tough technical chops to get into that pre-seed, seed, series A level. You can just boil all the options and see what sticks with the majority.
I mean, I have actually noticed a large influx of chief storyteller in a lot of these AI firms, and it's mainly just a taste evaluation, whether you can produce content that feels more human and is necessarily appealing. But before we get started, let me introduce you and get a little bit of background on you, because that is where most of the clickbait's going to come from. Trust me. All right. So, well, we both went to the same high school. And from high school, you went on to study at Penn for undergrad, which was my dream undergrad school, I will point out. And then you went to Wharton, which is my dream MBA school. And then you have to go and become every brown parent's dream, get a Rhodes Scholarship, end up at Oxford, and you didn't stop there. You go on to found your own startup, move to Silicon Valley, get Y-Combinator funding, and now you're having fun at Coachella. Well, we're just looking at you from miserable Sri Lanka.
What an intro that was.
Anyway, tell me about the journey and how you ended up in San Francisco.
Yeah, for sure. I guess like going into college at Penn, I was always interested in like this whole entrepreneurship side of things. I was always curious about like back in school, I would always be reading about like Tesla or like Elon Musk or Steve Jobs or Uber or stuff like that. Like I was super fascinated by this 0 to 1 journey. So when I went to Penn, I was with the notion that, cool, you just had to be a really good engineer and then people just fund really good problem solvers. So I was like, cool, let's do this. And I really like the bio side of things. I thought healthcare is the coolest thing ever, and I still do. So went full into that. And I very quickly learned in my first year, like a lot of the things that we worry about in a medical setting, like for example, getting an organ replacement or getting a dental implant. Stuff like this, I was like, cool. But the professors that were teaching me were like talking about their research, being like, oh yeah, we made this thing that lets you 3D print organs and we're working on ways to get this to work on a mouse model. And then somebody else was like, yeah, we figured out a way to 3D print biodental resin. So it's like you don't have to spend 2 weeks sculpting a tooth. You can just take a scan, get a print, and get the implant on the same day. And I was like, this is super sick. Like, clearly these people are solving the problems that have plagued us. So when I started talking to them, like, why don't we see this at hospitals, especially like tier 1 healthcare centers in America? And then it came to be like, hey, it's not just a simple matter of having the best idea or solution. It's also about how do you source money? How do you run a company? How do you manage people? And that was like, oh shit, that's like the second part of the problem. Okay, cool. So then I was like, okay, I got to figure out a way to learn the business side of things. And Penn had the option to apply for a dual degree program once you get into Penn. So that's what I ended up doing. And I got into Wharton in my sophomore year, and I concentrated in entrepreneurship. And that was super fascinating. Now learning about all these other entrepreneurs, hearing from the VC side, understanding how valuations work, how do you sell a story? And then towards my last year, I declared a second concentration into finance, and specifically VC finance, just to understand like what are like the numbers and the risk hedging a VC would do. So I was like, cool beans. I figured out the engineering side. I know the business side. I'm going to be able to, start my own healthcare company and go out there. And then I'm coming towards the end of my time at Penn, and then graduation was coming on. I was like, shoot, I got to figure out where to apply for jobs. I figure out like stay in the country. But that time, I was like, oh, recruiting seems tough, but I really like research. Let me apply to PhD programs. And I was like, I'll buy myself more time. And then I also kind of gaslit myself because like some of the people I spoke to, like Professor David Commodore, Professor Dr. I believe Rothberg, but essentially he was one of the first people he was the person who literally developed the machine that does whole human genome sequencing. And like talking to him, David Rothberg, I believe that was his name. And talking to him, it just hit me like, you also need to have like a way to humanize healthcare, and like you can't just be throwing machines at the problem. Like for example, Sri Lanka has a fair amount of CT scan machines and MRI machines that have been donated from other parts of the world, but they're underutilized to an extent where there might be mismanagement of the resources in terms of wait lists and whatnot, or you have people who feel like it's a daunting process to be put in this metal cage to get an image, and like it doesn't feel accessible, and there's not a lot of work being done to kind of meet people where they're at and help them with their healthcare, but rather the narrative is like, this is the standard, either you get with the program or not, despite you realizing that this person's entire life and everything's revolving, that everyone's coming from a place of fear when something happens with their health. So I was like, okay, cool. We need to figure out a way to like humanize this. I need to figure out how to like connect and do the story and like do that part of the whole problem. That's when I applied to Rhodes and got into Oxford to help design medical AI systems to automatically detect epilepsy in low middle income countries. And that was very interesting because now I'm learning about cultures, right? For example, so we have to use an EEG headset to record the electrical activity on their scalp to figure out if they have epilepsy or not. But the color of the headset determined if people are going to use the system or not. So for example, if you print it in white and give it to patients, they don't want to put it because white signals death. And them putting on this EEG cap that's white for them, they were like, I don't want to be mocked by death. I don't want to have the death's angel kiss me. So they're like, we're not going to put it. I know it'll save me, but I don't want to put it. So then you learn about ethnography and like how people of different cultures, especially in low middle income countries, like that have strong cultural roots, like how do you build systems that meet people where they're at? Like in that case, for this person to use it, if we painted it pink, that person would be like, cool color, let me put it on. And they'll adhere to the thing, right? And stuff like that, like especially when you're introducing new technology, people are scared, especially when it comes to their health. Like another case was like a lot of elders in Kenya didn't want to be put in the EEG headset because they thought it would capture their thoughts and dreams and deeper secrets. So they didn't want, like their personal matter being given to this other doctor. But when all of that happened, I was like, cool, I got all of this. And then I was like, now I'm in a freaking rat race. Now I need to finish school here. Then I need to go find a job and then, I don't know, save up some money, figure out a way to come back to the US, and then maybe hopefully start my company and like do the thing that I really wanted to do. And I was like, damn, that's such a long way to do it. I was getting fed up of the UK system and I was like, no, I got to come back to the US. And then I spent my second year just applying to every accelerator known to mankind and to just keep going until thankfully YC picked us up and went to America. The rest was history. And for YC, I went in starting a AI research company, building AI agents for research. So we were building, we essentially built, what was it? OpenAI had something. Oh, deep research. Before deep research was a thing. We would literally send out multiple agents to scour academic material, find academic material, and then read the content and write computational experiments. So this is targeted towards AI, bioinformatics, sys people, where you look at a paper, our system will find data sets, will build the experiments and give it to you. So you don't waste 4 to 8 weeks recreating papers and doing your new research. Now you just rebuild all of it in a couple hours, and then you just focus on trying to innovate. Then I was doing that for about a year, I want to say 8 months, 9 months. And then I left that. At that time, my co-founders and I, we had like very different vision of where this was heading. I was very much like Notebook LM is going to take over. We need to like hunker down and like really get this right. And there's a good opportunity. We were earlier than Notebook LM. Like we could have really cornered it. But my co-founders had a different read on it. So at that point, due to differences, I was like, yo, guys, you guys could carry on. But I kind of want to solve a different problem now. And I ended up joining another startup and founded another startup in robotics. And that too is also YC backed. And we raised close to 1.8 million US dollars for our seed stage. And that's what I've been working on for like almost a year and a half now.
All right. This is pretty interesting, and let me touch on a few things. Firstly, so you casually applied to the Rhodes Scholarship, got it. Casually applied to Y-Combinator, got it. Casually applied again, got it. You got into the most sought-after programs in the planet by just casually applying. And I'm assuming YC backed your O1 visa, so now you can live and work in the US too.
Correct.
Right.
I wish casual was the statement, but no, those processes were so tough. Rhodes, to this day, I think I got very lucky. I think Rhodes had a very interesting system. So the university has to vet you. You have like your GPA requirements, whatever, but the university can only recommend 3 students to apply for the global constituency of Rhodes. So the university has to vet you out and look at everyone's recommendation. Let us pick whoever. I got through that stage. The whole reason why I applied for Rhodes was not actually to get Rhodes. I was talking to my advisor and he's like, dude, if you want to like get into good PhD programs, you should apply for Rhodes because you are forced to get 6 or 7 recommendation letters and the university will vet out your application. So I don't know the content of my recommendation letters, but the university would know and they would recommend which ones were the strongest. So I was like, this is such a sick hack. I clearly want to do this. So I did it. And then one thing led to another, got the interviews. And at no point did I think I was going to get it. And they just called me like 2-3 days after the finalist interview. It was like, hey, Raveen, can you hop on a quick call? And at that time I thought, they're probably doing re-interviews because that's common place.
Right.
So I rushed. I was in the park and I rushed back home, put on like just a sweater so I looked kind of formal because I didn't have my suit on me. And then I log on and then everyone was already in their suits. I'm like, congratulations, you got it. And I was like, I didn't believe it. I was so shocked. Like they were like, aren't you excited? And I was like, yeah, I guess. Because I was so shocked. I just didn't know what to say. I was like, yeah, I think so. And they was like, why are you so deadpan? And I was like, I don't know what to say. I don't know what to process here. But yeah. And YC was like a 2-time application process. I applied the first time. They gave feedback. We interviewed, but they gave feedback and they're like, you got to iterate. So we've pivoted from that to the research thing. And that got in the second time around. But YC, that year I was applying. So I applied winter 24 and then summer 24. So I got in summer 24. There, it was kind of like they're trying to see if you're willing to like stick out at the problem. I think the credentials were strong enough for them to be like, cool, we want to talk to these people. But they wanted to see how much we were willing to like talk to random people, test our ideas and fail. And what did we learn? And then once we proved that the second time around, they're like, cool, we'll let you in.
And this is quite interesting because, and my point is mostly concerned with the opportunities that are available in the US, but I think people really underestimate the wealth of opportunities that are available in places like Silicon Valley, LA, or New York. I don't think people who haven't necessarily lived there and experienced the work culture and the drive and the perseverance of those specific demographic areas.
Yeah.
I couldn't put into words how much opportunity and how much random things you can throw at the wall and something will stick because of how driven that community is, and just being around them gives you so many more new opportunities, networking capabilities. I think no place on the planet can offer you the trajectory and momentum that America offers you, irrespective of what anyone's political views are, irrespective of whether you like the president or not. If you're an investment banker in New York, you're in the major leagues. If you're a software engineer in Silicon Valley, you are basically a unicorn in the world. And I think that sort of gets me to my docket, which is one, I want to talk about the YC experience, but mostly venture capital as a whole. And I feel like we can get into technicals with your background too. And address a couple of misconceptions. And I'll go through them one by one and we can talk through it. And I think the first misconception, and I get that I just talked about how much opportunity there is in America, but there's this lottery ticket fantasy about startups, and people hear a story about someone who put $20,000 into a pre-seed round of what became a unicorn, and they think that's the game. Just find the right company early and you're a billionaire. But what that story leaves out is everything that happens between pre-seed check and the exit, which is that every single round of funding essentially dilutes an investor. And it's not necessarily just an invest and hold for a decade and boom, you're a billionaire. But a $20,000 check buys you, say, 1% of a company at pre-seed. Then the company raises a seed round and you get diluted to 0.8 with a typical 20% depreciation. And then let's say you go to Series A, that's another 20%. You're at 0.6, Series B, C, D. And then you open up employee option pools, secondary transactions. And by the time the company goes public, your 1% is pretty much reduced to something that's probably going to return something on your investment at that scale, but not necessarily what people hope for it to be, especially for companies like Stripe, who have been private for close to a decade now and raised rounds at such large magnitudes that reinvestment on a pro rata basis is exclusively reserved for these incredibly large institutions. And another key point is that you've also got to understand that the venture capital market is riskier than private equity. It's riskier than stocks. It's riskier, way riskier than bonds or any treasury bills. And venture capital investment is usually reserved for high net worth individuals, not necessarily for an exclusivity point, but rather because your investment almost certainly will go to zero, except for rare cases. And say a venture fund invests in 10 different companies, more often than not, it's one company that's going to return the other 9 companies going to zero. And that is a huge risk that an unsophisticated investor that can't necessarily afford to lose $250,000, they just shouldn't be taking that investment. So what exactly is your take on this lottery ticket fallacy, and where people just hope to invest in SpaceX now and just hoping to become a billionaire overnight?
Yeah, so there are two sides to the coin, right? So we'll talk about it from the investor point of view and then from the point of an operator. Operator, in this case, would be the person who is running a startup. And from the investor point of view, actually, a lot of these angel investors, they, like you said, this is not their full-time thing. This is not where all their wealth is, right? Like for them, these are like moonshot opportunities, and they invest with the mindset that, hey, if I lose $20,000 tomorrow, would I be ruined? And if the answer is no, they're going to invest. And a lot of them kind of take like a systematic approach to it. So like the angel investors within the YC community tend to be previous YC founders. So they believe in the brand a lot. Secondly, they tend to pick verticals that they are very strongly, like they have good, deep knowledge about. So they're not like throwing money randomly. Whereas when you look at VCs that invest exclusively at seed, pre-seed, Series A, they're a little bit more haphazard than the angel investors, because they have a lot more assets under management for them to throw around and mess about. So they have a little bit more of a spray and pray kind of tactic. And they kind of try to narrow that spraying, being like, oh yeah, we have VCs that focus on deep tech or AI or whatever. And they just pick like a generally broad angle. And you're right. When it comes to investing in stuff like this, it's usually 1 out of 100 investments that pan out. And when they pay out really big. And every time you go from the more stages of funding you go as a company, the more vetted out you are, and then less of it becomes an art and more of it becomes a science. So for pre-seed, seed, and to an extent Series A, these are just based off of, do I believe in the team? Like, do I have conviction for the way this guy talks and operates? Do I have conviction of his background to deliver something of this scale or this particular idea? But post coming towards Series A, now it no longer matters about who you are, where you went to school, what you did, what your work experience is. Now it just becomes hard facts. How much is your annual revenue? How much is your burn rate? How many pilots, how many contracts? Like, these buckets just change depending on what sector you're in, right? So for enterprise customers, enterprise-based startups, for them, it's how many pilots they're running, what's their annual ARR. Whereas for like a consumer app, you're more concerned about your monthly recurring revenue and your retention rate and how many people spreading the word and distribution and stuff like that. And then more you progress, now you have more numbers to add and more numbers to add. So now the investors are just looking at numbers and running mathematical models, so less risk, hence the payout at later stages become more and more less, right? Because each stage, like the number of YC companies from our batch that still operate after a year and a half, maybe 2, is probably around the 50% mark. Like, if I was to guess, like half of them just stopped doing that thing and went back to their back to their old jobs, or decided to go elsewhere or start another company. That's that. But from the operator side, right, angel investors are literally our lifeline. Because when it comes to investment, it is essentially, if you don't set a deadline, this is why YC is so great. There's this whole notion of demo day, and investors have till demo day to decide if they're going to fund in money or not for this batch. So there's this looming deadline on the investors where they're like, cool, we have to make a decision on 200 plus companies and see which ones we want to invest in. And that forces people to go on heuristics. Sometimes you don't have enough time to see if this technology will distribute itself, especially in deep tech, as far as it is or whatever. So you have to not depend on heuristics. Where did these people study? Did other smaller investors hedge on them? And that's where the angel investors come in. So we take like a systematic approach. We start out and target as many angel investors as we can to build conviction and then build intros to smaller, medium, and larger size VCs, and we go in that order. So for us, even though it's risky for an angel investor to invest, we need angel investors to invest because that's the only way we can get momentum going to convince the other round. So the more angel investors we have at the beginning, much easier is it for us to convert the other VCs and then get those big checks and the ones who are like, you know what, we're going to lead you around, et cetera, et cetera. But yes, it's risky business. It looks like you only hear the success stories, you never hear the failures. But the reality is, it's a numbers game. They know that it's a numbers game, so they invest wide and far, and then they have a few that really make up for all the losses and then some.
Right. And it was really interesting that you mentioned deadlines when it came to venture investment, because that was my next point, which is the misconception about runway. And as far as I understand, a standard YC deal is 500,000 with 125,000 that converts into a fixed 7% equity stake, if I'm not mistaken. And the remaining 375 goes into an uncapped safe with a most favored nation provision, which basically means that it converts at the best terms offered by any other investor on your next round. And does YC reserve pro rata rights to participate in every subsequent round?
They do.
So that feels like a pretty clean deal for founders. And is that consistent throughout for every operator?
Yeah, it's a pretty bog standard deal. And the best part is they just they don't break up the payment into 125,000 and 375,000. They just give you the 500,000 upfront, even though it's broken into those two terms, but your bank account gets hit with a single wire of $500,000 on day one. So having $500,000 in your bank from the get-go as soon as YC starts, having that kind of capital flow for, especially in international, like I would gladly give up 7%, and then maybe 2% more depending on the valuation, just to have legal advice that'll get me set up with everything in the US, from immigration to running, like getting the company set up, having the network to start finding our first initial customers, and then just expanding the network. Like if you really want to be in this space as an international, having applied everywhere, this is the best deal you possibly get, and the brand recognition, right? It's so
and two things when this comes up. Firstly, being mainly for an international founder, you need incubators like Y-Combinator to essentially provide you with work authorization without H-1B requirements. And you also don't necessarily enter these tech markets in Silicon Valley with existing networks. So a place like Y-Combinator would essentially give you the accounting, the marketing, the legal side of the business, and structure you in a very specific way that enables founders to focus on the product without necessarily burying you with too much admin work. But what is surprising to me, and I didn't know this before now, is that YC doesn't give you guys a term sheet with certain thresholds to meet to unlock funding. Is it all just given to you at once? That's quite impressive. But I guess conventionally, and I guess this is the second misconception I wanted to touch on, is that people think getting funding is the extremely difficult part. But from what I've seen with a couple of my friends raising, getting funding is super easy. The hard part is managing what comes after you get money. And that's a term sheet, which is non-binding, but outlines conditions under which an investor will fund you. And that could be valuation, board composition, liquidation preferences, anti-dilution provisions, pro rata rights, like we spoke about before. And each of these terms is negotiated, and each shapes how much control you retain and how much upside you actually capture at an exit. And a founder who doesn't understand this, or an investor who doesn't understand what broad-based weighted average anti-dilution clauses does to them in a down round, is walking into a trap that they don't necessarily understand until it's too late. And I feel like there's two sides to this, but to me, it feels like it creates this runway problem where I'm assuming YC recommends raising for 12 to 18 months of runway, if I'm not mistaken. Yeah, so enough to build, test, and hire. But what the medium wait times between rounds now indicates is almost 3 years. So is 18 months of runway necessarily enough at the standard YC practices? And also, it's the companies that are surviving the current economic conditions are the ones that raised longer runways and managed burn with a lot of discipline, right? They're not the ones that raised crazy valuations and hired aggressively, because we saw from 2021 where there was this massive overhiring, and I think that subsequently led to a lot of the layoffs of 2023 to 2025, and the money was real. The business underneath it, in many cases, didn't necessarily have the oxygen to breathe.
Yeah.
Any thoughts?
Yeah. It is, I think the YC mantra is survive. And you just want to spend enough capital and money to maximize your chances of survival. Because when you're coming in at especially pre-seed and seed money, you have to be kind of malleable. You have to be able to kind of, sure, you need to have an opinionated approach, right? That's why, like people are like, yeah, we're going to back you. But within that opinionated approach, you need to be quite versatile, being able to swap and build on ideas as much as possible. And the best resource you can give yourself is time. The more time you have, the more you can ideate, more you can iterate, and hopefully you will hit on something that'll catch on like wildfire. Then when it comes to how much money you should raise, that also depends on what your R&D cycle, the duration of which that R&D cycle has to exist. So if you're in deep tech, so building space applications or frontier robotics or biopharma, For that, the R&D costs are quite high. So obviously there you need to raise massive war chests, and like bigger your war chest at minimizing dilution as much as possible will probably ensure your longevity. Across all of that, the discipline comes down, like the general principle is how much time can you buy for yourself? There's two ways to do it: bring down your burn and increase your war chest. And you just have to pick which one would be easier for you to do at your given point of time and what sector you're in. So going back to that deadline of demo day, right? Because all these investors are operating with limited information. They have this fear that some other investor will hop in at a lower valuation or get better rates or be able to negotiate a board seat or whatever. So there's this pressure now for all these investors to kind of just go ahead and give you money. So demo day around that time is also a great time for you to to have as big of a war chest as you possibly could, because that kind of attention and that kind of very quick due diligence processes only hover around demo day.
So you'd say having a bigger war chest outweighs the risk of raising too high of a round and not being able to meet certain thresholds in your term sheet and running out of runway.
Correct. So in the cases of raising seed stage funding, right, a lot of the seed deals that we saw within the community, like they didn't have explicit performance criteria to be met to unlock more funding. So at that seed stage, if you can raise a bigger war chest, you're good to go, but within reason, right? Like there's no point in you raising so much, because that is also your most expensive round for you as a founder, because you have to give up so much of your equity. So it's a balancing act. Series A onwards, you have that performance criteria come in.
I guess I was looking at OpenAI mostly as a case, as opposed to seed companies where their last round closed at $800 billion, and they're eyeing an IPO with a valuation of 1.2 trillion, but there doesn't necessarily seem to be that much demand for a $1.2 billion valued OpenAI, when there doesn't necessarily seem much interest in the $800 billion valued OpenAI. But I guess this also moves me on to a second segment, and something that keeps popping up on all my social media feeds right now. And I don't know how Sam Bankman-Fried has resurfaced on the internet. Let me preface by saying the SBF story is endlessly discussed, and I want to go somewhere where most of the coverage doesn't. And there is most definitely fraud. Alameda had invested money that they weren't necessarily supposed to be investing, but it is, and after looking at the companies that they've invested in retrospect, Alameda might have had one of the most extraordinary investment portfolios ever assembled. And again, unpopular take, yes, SBF is in prison and the fraud was real, but some of these investments are brilliant. And what the bankruptcy did to those bets is one of the most instructive examples of how unsophisticated liquidation absolutely destroys value. And let's look at some examples. FTX and Alameda invested $500 million in Anthropic in 2021 for around an 8% stake. The bankruptcy estate sold the stake in 2 tranches for $1.3 billion, which at the time looked like 2.6x on returns. But today, based on Anthropic's current $380 billion enterprise value, that 8% stake would have been worth $30 billion. And the estate recovered less than 5% of the eventual market value. And this is before Anthropic's IPO. Alameda also controlled, 58 million Solana tokens, and the bankruptcy trustees sold 30 million tokens for $64. And when that sale executed, Solana was already trading at $147, but they sold it for $64. And if the complete Alameda and FTX venture portfolio had been held, then force liquidated, its estimated value today would have been $52 billion. The estate covered around 18 billion total. So the liquidation destroyed approximately $34 billion in value. And yes, understandably, this is how bankruptcy proceedings work, and the instruments of the bankruptcy process weren't necessarily designed to capitalize and recover any investment, but rather to return money to creditors as fast as possible and not optimized for any kind of portfolio optimization. And this is what I mean when I say that the SBF story is a lot more complicated than it's presented, because the fraud was real, the criminal conviction is justified, but the narrative is that everything Alameda touched was garbage, and it was demonstrably false because the portfolio was making the right bets on AI, on crypto infrastructure, on a generation of technology assets, and the crime was in how the exchange was run, but not necessarily where the money was invested. Yeah, go on.
It's such a freaking generational run, right? And I mean, that's, I know it's a sad thing, but at the time, right, it's so easy to say it retrospectively. But at the time, right, like when you needed your cash back, when the liquidation had to be done, it's like, okay, cool. How do we recover as much money as possible from the side of investors? It's easy to be retrospective and be like, oh yeah, I should have been there. But at the time, right, everyone kind of makes the best decisions. They make their decisions with the best available information they had at the time. So can't really fault them either. But yeah, dude, like just imagining those trades still being around today, dude. Generational run, generational.
And I think, well, not necessarily very similar, but I think I've noticed a certain trend with US government's blunt liquidation of assets. Even during FTX's collapse, Anthropic was on its way to becoming one of the most valuable companies on the planet, even in 2022. And I feel like there's a lot of mismanagement with unsophisticated investment managers that handle government-controlled claims. And a perfect example would be how the United States sold all of its seized Bitcoins for pennies on the dollar as opposed to banking them as reserves. And that alone, I think, would have made a substantial dent on their national debt by now, because they did seize millions, billions of dollars of Bitcoin and just sold it at market rate.
It's crazy, right? Like that's also the other thing with like the public sector. Like the public sector is just not doesn't move as fast as the private sector. I mean, that information asymmetry alongside the execution and the speed of execution asymmetry, that's what leads to market opportunities, right? That's why you hear the stories of a couple individuals or like a couple savvy businesses and companies and groups just kind of raking in that kind of money. But definitely, I think this could be a lesson for pretty much almost all the governments across the world, is just having a stronger pulse with the public and kind of identifying all these new trends, right? Like governments are generally looking at from a point of like, how do we mitigate risk, and very risk averse. But I think there are chances where governments could be a little bit more willing to be a little bit more forward thinking, kind of mitigate it. And for that, you just need to be able to attract the right kind of people to stay in government, right? Like the people who are inherently excited about blockchain aren't necessarily thinking like, you know what, I got to go work for the government. They're probably being like, how do I hop on this? And like, how do I innovate here? How do I move fast to like be in this space, right? Like the people who are really fascinated about AI, a handful, if at all, would have been like, oh my God, LLMs have changed the world. I need to figure out how to govern this. And a really great example for this actually was I was reading this biography about this lady who was a diplomat for New Zealand who ended up being Facebook's first employee who dealt with governance, because she identified that Facebook is very quickly being adopted by people around the world and can be used to change public opinion, and that can influence policy, governance, diplomacy, etc. So she was like, Facebook needs to think about this. I'm gonna convince Facebook to give me a job so that we can architect it. Like now, when we talk about it, we're like, yeah, that makes complete sense. Think of all the social media bans that happen when there's like a government upheaval or any kind of unrest. But at the time, Facebook, Mark Zuckerberg was like, nah, like we just had to keep expanding and get more people to be on it so we can get money and like kind of keep the business alive. Nobody was thinking about like spillover effects. But thankfully, this lady managed to convince Facebook after 2 years, mind you, of convincing them that they need to like really consider this and get a job. They brought her on board. They were like, okay, you're the only person who's going to work on this department. Then she worked her butt off to get Facebook to talk to government officials and government officials to come visit Facebook and talk about how do you start setting laws and regulation to make sure that misinformation and public sentiment can't be manipulated for malicious intent. But what I found fascinating was even governments were very dismissive of the idea, and that was just this one person who was trying to like saw the vision and just like trying to make it happen. But it was so hard.
I think you bring up a pretty good point. And I've been noticing a growing trend amongst Washington and American politics specifically, where operators are now being given the ability to shape or advise policy. And this might be an unpopular opinion, but I can almost see a noticeable difference in how government systems operate. And an example would be NASA or the crypto czar of the White House, who have very in-depth technical knowledge of the industry that they're advising, and that gives government the ability to be a lot proactive and proficient at how they regulate these industries without severely compromising the competitiveness, the global competitiveness of these industries, especially AI, where we have one side of the political spectrum that wants to hit the brakes and restrict and regulate AI as much as possible, and the other side that understands the need for America to win the AI war, which means empowering companies to remain competitive in the face of rivalry with Chinese companies who have national subsidies, who get infrastructure, who are given pretty much unrestrained access, even with IP technology, to compete as rigorously as possible. Whereas in the US, this regulation from information asymmetry or misinformed politicians in power could essentially lose America the AI race and subsequently lead to aftershocks that come from a hegemony not necessarily controlling the breakthrough industries.
Yeah.
And I guess that transitions us into AI and the AI stack, which is also going to get us a lot of views because of clickbait.
Woohoo.
Let's talk about AI, and let's break down the AI stacks from layer to layer and talk about them individually, because I think they all have their own nuances and it would be insightful. Here's how the AI stack actually works for people listening from the bottom up. The first layer is energy, and everything runs on electricity. And above the energy layer is chips. And above chips is the foundational models, GPT, Claude, Gemini. And above the chips are the application models. Now, let's start from the energy layer. And AI compute demands are going to require a near vertical increase in power generation. I think GS estimates that the US data center power consumption will almost triple by 2030. The real geopolitical question of who controls energy production is arguably the most important constraint in the entire AI race. And it gets almost all of the negative coverage relative to its actual importance. And the real bottleneck isn't even the model, it's that AI systems require energy at a scale that the current grid cannot support. And that's not necessarily because it uses energy in so much excess that demands just skyrocketed, although that is a part of the situation, but also because America has one of the most outdated electrical systems when compared to nations like China, who are almost growing at a rapid pace in terms of energy supply. And I think one of the key constraints that Jensen Huang from NVIDIA or any of the companies that run AI infrastructure keep reiterating is that if you can't power the stack, nothing above it matters. And one of the most existential problems right now is American energy supply. And the companies quietly winning the AI race right now might not be the ones building the most impressive models, because in the future, the ones that can actually function might just be the ones that can afford to build nuclear power plants to power their own data centers. And this is where I guess the funding rounds and these large blue chips matter, because they're the ones that have the ability, the legal power and the capital to invest in energy infrastructure and power their own technology, whereas everyone else on the stack will need to completely rely on these large Mag 7s that are able to generate these powers, or even SpaceX now with solar-based data centers in space.
Yeah. And I mean, you hit the nail on the head. If there's no energy, there's nothing that we can really power with. And it's also kind of like, it's also a little bit of like a chicken and egg problem. The more efficient chips you design, and you can also look at it from top down, right? Where it's like, okay, at the beginning, we were brute forcing this problem, where it was like, okay, cool. We learned that the more parameters we have in a model, the smarter the model tends to perform. Great. Did we optimize the chips to run these calculations? No, we were using open source research grade Python libraries that were designed to run on GPUs or existing hardware. Cool. So then it just became a scaling problem. How many chips, how many powerful GPUs can we throw at this problem with as much electricity to grow the model linearly without really fully understanding like the architectural decisions? Now we're at a point where we're starting to see the trickle down, where, for example, Gemma, Google did a whole research paper where they took the vector embeddings. So for our viewers, essentially the LLM holds a vector, which is like a coordinate in 3D space. So you have your X coordinate, your Y coordinate, and your Z coordinate. And that vector essentially holds a bit of information or understanding of the language for this model. So to have a bigger understanding of the world, the more vectors you can have, the better it's going to understand the world, the more parameters. But each parameter requires a certain amount of memory to be held. So the more vectors, the better the model. That also means you need more memory, more processing to train that memory. So a lot of electricity. What Google did was they're like, okay, cool. Instead of needing 3 variables now to represent one vector, why don't we use polar coordinates, which is essentially magnitude and angle. So now what used to take 3 units of memory can now be done with 2 units of memory. That also means the calculations that previously needed the processor to be able to handle 3 variables to be manipulated in a certain way to learn about the world can now be done with 2. So with that architectural change, the memory and power requirements to train such a model have become less without really sacrificing the model accuracy and performance. So something like that fundamentally changes how we do power consumption and whatnot. It's the same story that happened with fossil fuels and cars, right? At the beginning, we didn't know how to build efficient engines. More cylinders, the more power, the faster we can go. So we scale the number of cylinders we have. Then we realized, oh, wait a minute. What if we start, supercharging our engines, have turbos now, so that the motion, the explosive power is more with the same amount of fuel at the same number of cylinders. Now we started becoming more efficient. Then we started realizing, oh, wait a minute, why don't we hook up a battery and do hybrid systems? And we can now optimize and tune our engine so much, we can get 500, 600 horsepower from a 6-cylinder engine, whereas like 5-10 years ago, you needed a V8 or a V10. And now, because of this, we're at a point where at the beginning, it was like, we need a lot of fuel. We got to be careful. We don't know what the hell's happening with our power usage. To now being like, oh, we're at a point now we can start managing this. And like, we don't need to stress about energy or fuel reserves of oil, infra or whatever. And I think AI is at a point now where we started to understand these systems well enough that we're starting to see actual R&D and changes on the model hierarchy level, where this whole narrative of like, we need more power, we need more power, we need more power is now going to fizzle out. And now we're coming to a point where it can start taper off. So I guess what I'm trying to say is that power consumption, that energy fear is not as big as it used to be, even like a year or two ago. When ChatGPT 3.5 was a thing, the energy required to answer one query was equivalent to the amount of energy you needed to boil a bottle of water. And now it's sizably less.
So basically what you're saying is the more efficient these models get, the less processing or energy requirements that the chips will need. And I think this applies to the chips layer too. And NVIDIA obviously went from a gaming's graphics card to being the most indispensable infrastructure provider for the AI economy. And the chip layer is where most of the capital is currently concentrated, and most obvious infrastructure risk exposure that I see. But I feel like Wi-Fi routers or fiber optics cables, the chip layer gets commoditized eventually. And just as Cisco routers were the indispensable infrastructure of the internet before becoming a commodity, GPU compute will follow the same path. And the question is the timeline and not necessarily any other factor. And what I'm also starting to hear is that these GPUs are running for significantly longer than the expected lifetimes. And I heard it based on accusations of financial accounting fraud where depreciation was altered to prop up profits. But that doesn't necessarily seem to be the case, because the chips are now getting longer lifetime use than they were initially intended to, and this is just accounting adjustment taking place. But I think what you could really explain to us is what's above the chip layer, and that would be the foundation models, GPT, Gemini, Llama, XAI, and these large language models that everyone talks about. And it's the most expensive layer to build because the training and frontier model now costs hundreds of millions of dollars, especially because of IP regulations, but that isn't necessarily a problem in certain other countries. And the moat here is relatively ambiguous. Is there a durable advantage to being first or the best model at the model layer, or does the model become a commodity that anyone can run? And the debate's genuinely unresolved, because at one point OpenAI had 100% market share and they were the dominant force. And it was obvious to most investors that market share was only going to go down from here. But I think it was this week where Anthropic's revenue overtook OpenAI's revenue. And now it creates a question of whether the actual first mover advantage is advantageous at all, or if you're better off coming in late with all the iterated features and updates that come in progressively to the initial models.
Yeah. So I guess in the realm of trying to be like an AI research lab, it's one of those things where it's like, it's really tough to do. Like one of my friends from Rhodes, she ended up raising a crazy amount actually. She raised a Series A at a $1.6 billion valuation to build AI for math, essentially models that were smart enough to do mathematical proofs. And for context, like what allowed her to raise that Series A money, amongst other things, was the ability for her. She and her team built a model that essentially solved the Putnam exam. So the Putnam is the world's hardest math problem. And like people get ranked all over the world. There are 12 questions. No human ever really gets 12 out of 12. But for the first time, this model did it. It solved the 2025 Putnam exam and got 12 out of 12 correct with robust mathematical proofs all on its own. But what I'm trying to say here is that for most founders, most people who want to get into AI, thinking about their foundational model is kind of tough now. Like it's like we as individuals are wanting to start a company, you need to come up with a niche to build a model that is in like a particular subsection, like what my friend did, choosing math, choosing lean as that programming language for solving these mathematical proofs and stuff. That's very niche. But what that means that is you should not be trying to be, as a regular AI startup founder, I think trying to be the first mover is kind of dangerous, right? It's like you need to come in at a point where you're starting to see where the trend is and kind of build it, and then also build something that you hope OpenAI and Claude wouldn't just freaking take over and you just destroy you, right? Like Claude Design came out like about a week ago, Lovable, all these other design companies. Figma essentially, I think, dropped 7 points from their stock as soon as Claude Design was announced, right?
And I'm so glad I didn't buy into Figma. There's no better relief, especially because of how chaotic their IPO was.
Yeah.
I am so glad I didn't buy into Figma.
That's also a whole other ordeal, right? Like there's this whole story of like their corporate lawyers propping up the value. They were trying to game the system and then kind of misfired, and like the internal team just had, I guess, I was going to say real quick, I think the real layer to really worry about in this AI front is building the harnesses, which in our case would mean the prompts, the context, and how you reveal that context at a systematic layer. So as somebody in the AI space, you want to build a company in the AI space, you should just always assume that the models are just going to get better and better. And they're generalist. What can you build that can allow these generalists to be really good specialists? And that boils down to your prompts, how you design your skills, how you design the context, and managing context rot. Context rot for viewers is that the more information you provide a model, the more of its memory it gets taken, and it just ends up performing worse because it has less capacity to hold on to vital information as it's trying to solve your problem. But that's where it is now. So AI startup, now you're focusing on agents. Cool. That's the thing. Everyone needs to have agents. But the next layer now is the harness. How do you build something that the AI agent is able to build its own standard of process or whatever, and then modify that based off of the output it gets and like self heal and like make it better. And that's where the future is heading. Like the people who are able to build these beautiful harnesses that just work can be sold. And Claude Code is a great example of that. It's just a harness. It's literally a bunch of Python functions that take your input and paste it into their exemplar prompts and reveals information systematically, so that Opus, which is this huge generalist model, can perform like an absolute coding beast. So if you can recreate that, that's great. And like for people who are really curious about what I mean by this, you should find the GitHub repo that has all the leaked Claude code, source code. And it's just essentially a bunch of simple Python functions that take your input and paste it into another prompt, to another prompt, to another prompt. And it's just this harness.
Did you see how Claude responds to threats?
The end turn, I saw this one guy was like, it ended its turn, and then people were like, I wonder if it's fake or not. Yada, yada, yada.
Anyway, but
on a random tangent. Sure. Oh, sorry. The moment when you mentioned that, if any of the viewers are interested, there's this GitHub repo called Heretic, and Heretic is this research paper. I forget from which university, but essentially they programmatically designed a way to test 400 to 500 prompts with any model you give it to identify its safety, like its guardrails. Like, you know how if you ask a model, hey, how do I cook meth? It's like, I'm not going to tell you. You're probably going to make meth and sell it and do some illegal stupid shit. But with Heretic, with these 400 prompts, it figures out how you can break the prompt and figure out what parts of its vectors are the guardrails, and then just delete those parameters from the model. So now you can get this model to tell whatever the hell you want. And that's like a cool thing to think about, right? Like when you talked about Claude responding to this. So there are people actively breaking this guardrail system and whatever. And then you have people who are trying to like have better ways to enforce these guardrails. And how the guardrails are enforced goes back down to that harness problem, right? Like how well your model performs, how secure it is, how well it helps people solely is based off of how well you can control that harness of prompts.
And this is how I'm going to get cancelled on my second episode of the podcast. Giving people advice on how to bypass AI guardrails.
Hey, but purely scientific, do not do it.
Of course, do not do it. We did not tell you what this is.
This is not financial advice.
Absolutely. I think it was very interesting when you mentioned that now AI and landscape of AI businesses have moved into finding its niche and specialization, and that's how you survive in a constantly evolving industry. And that brings us perfectly to the models and application, beyond the models layer to the application layer. And this is where I have this pet peeve and it grinds my bones. And this is where that it's just a wrapper stupidity reveals itself. I want to say something directly about a phrase. People think they're so clever when they call things a wrapper, but someone builds an AI product, a legal research tool, a customer service platform, a creative tool. And the response from the tech community is it's a wrapper, as if building on top of existing models means the company has no value or defensibility. The application layer is where the customer relationship lives. It's where the workflow integrations are built. It's where the proprietary data is accumulated, and that makes the product better with use. A legal research company that has trained its system on 10 years of cases, outcomes, and built trust relationships with law firms has a defensible business that has nothing to do with foundational models. And if we are to call every application in the AI space a wrapper, then Facebook in its early stages would have been a wrapper for internet communication, and Spotify is a wrapper to listen to curated music in a very specialized way. And I think people often confuse owning the entire stack vertically to be a legitimate business, but that's not the case. And a wrapper isn't necessarily a justified title to give a company. It's still a product. The model is infrastructure, and infrastructure isn't always the business. So what exactly do you think about this?
Yeah, great points. I have a lot of thoughts on this, right? I think unlike any of the previous eras of rapid innovation we faced, right, like with the dot-com boom and whatnot, and personal computing boom, AI, this is the only technology, like fundamentally, my whole thesis rests on this. Fundamentally, this is the only technology where you can talk to it to figure out how to use it. If I bought a Mac when the Macs came out, I wouldn't be able to type to the Mac and be like, yo, so how do I plug you in? How do I crunch numbers on you? But for the first time ever, you can literally take this model that's a generalist and be like, yo, how do I do my taxes? And it'll walk you through it and it'll help you figure out how to use it, right? And because of this, having information or deep understanding of a particular niche has become commoditized. Because as the models are getting better and better and better, meaning it has more parameters, it has more information has been trained on, at some point, this model is going to end up touching information that was previously in proprietary or very niche data sets. And now these models are starting to be able to pick up those skills. So now you are able to literally just chat to Claude and ask it about legal stuff, and it'll probably give you a reasonable answer. Whereas like maybe 2-3 years ago, the models weren't trained on those documents, or like it didn't have the expanse of these data sets, that it struggled, and therefore that notion of having that vertical matters. So I think now it's a lot easier for anyone to point a finger and be like, that's a wrapper, because the models just have more inherent information that it could work with. And for a person to identify that it's that simple, it's a lot easier because you can actually chat with the technology and be like, yo, this other company is building a calculator app. Can you build a calculator app that does the same things? Yeah, I got you. I can do that. Cloud Code goes, builds it, and boom. By virtue of the fact that you can talk to this technology, copy somebody else's technology, it becomes easier to call something a wrapper. But this goes to a much deeper tech. So this is the other part of the tech, right? Where it's like now its execution has become commoditized. Being able to execute and write beautiful code or design something pretty or spend time editing something, That's gone. That is so easy to do. Anyone can do it. Now where the money or where people are getting funded is taste. Like, are you inherently somebody who has good taste? Are you able to identify and like have a good instinct to figure out things that will have a vital component to it or be picked up much easier? And to architect that goes beyond just prompting a model. That requires a certain level of understanding how to break down a problem, to figure out what outcomes and results to look at, to plug it back into this AI agentic workforce that has commoditized execution. So I think, and people are starting to realize that. So I feel the accusations of being a GPT wrapper will fundamentally decrease in the upcoming months because if you're a wrapper, you're not going to really be a company anymore, because that means you don't have a defensible moat, because execution and engineering talent used to be a defensible moat. Now it isn't. Now it's all about taste and how well you're able to break down a process into a proprietary process and like have your models have that. Then I feel like those accusations of being a GPT wrapper will slowly start to fade away.
And I think that's a very interesting point that you bring up, to be able to architect prompts and actually get the output that you require. And having sort of dabbled in AI without any technical expertise and being completely unsophisticated when it comes to code, I think this is where the supposed wrappers or application layers come into play, because what these applications do is they effectively remove the architectural part of the context windows and the prompt. Take Perplexity or even Claude Code. It's sometimes very difficult to actually get Claude Code to deploy for someone who has no idea what they're doing with code. And I feel like the new Codex, for example, will deploy LLMs and agents and deploy necessary skills without having an unsophisticated user actually having to go in and manually upload these skills. I think that is a layer that's almost getting solved in real time, and that is usually where the normal lay people with no knowledge of how to use this technology start to integrate it into their daily workflow, is when they don't have to plug in servers and MCP units and figure out how to deploy OpenClaw through a Mac Mini while making sure it doesn't steal all your passwords.
Correct. And that's where the taste component comes in, right? Like, for example, an accountant, and you're an accountant who knows AI. Let's say I know the AI part, I'm an accountant. I will have opinions on what skills work well for me as an accountant because I tried all of them. I know what MCPs I want because I played around with them and figured out which ones I configured them. And now if I wrap my preferences and my taste as part of this harness that I'm going to monetize and just make that harness accessible to people through like a simple app, people would pay now for that because they're paying to be able to achieve my level of competency with minimal legwork. And that's where that taste component comes. But the difference is, like, I could have, if I didn't have the taste, somebody else could have made it too, you know? Like, the only thing that really made my solution that much better is I think I have a really good opinionated take on what accounting should feel like and work like, and my friends think the same, and clearly people want to adopt it. But that had nothing to do with the fact that I chose faster models. It had nothing to do with the fact that I am running inference on faster GPUs. It just it sold on the fact that I have a good opinion on how this problem should be solved.
Now, Raveen, for the most important question that everyone probably wants to hear, will AI replace your job?
Oh my God. Yes and no. It depends on which side of the coin you're at, right? Like, if you are an executor, meaning you get a bunch of to-dos that you need to execute for your day-to-day work, provided that it involves you using a computer, chances are that job will be replaced. However, if you're somebody whose job is to think about more from a 30,000 point level kind of view, 30,000 foot view, and you're trying to figure out what parts need to be connected and what to move, your job's probably safe. And I don't think I don't think at any point soon would it be like AI will completely replace your job. Like that was a time, right? Before computers were a thing, they literally hired people who were called computers to hand calculate numbers and variables, and then the computer came. But those people for a short time were displaced, but they picked up computer skills and went back into the workforce. And we're going to hit a point where now people need to be more creative, where it's like, cool, it doesn't help that I'm a good code executor. I now need to understand more fundamentally on how architecture decisions work, or how do I productize something. So for the first time in a long time, engineers can, being a product manager, being in that design space would be more valuable now than being an engineer. And that's my hot take. I think engineers used to be like, oh my God, we need to get the most cracked engineers, yada, yada, yada. Now it'll be like, we need to get the most cracked product people who understand their users.
My take, and I'm going to say this in the most provocative way so that I can get some good clips out of this. Yes, AI will replace your jobs, but not all of them. And obviously not immediately, and definitely not uniformly. But there is going to be real displacement. And people saying otherwise are either just ignoring the data or have interest in people not looking at the data. Because I think when you look at the figures, the aggregate employment numbers, they look fine right now. And headline unemployment rates haven't absolutely collapsed. But that's because AI is doing, and what AI is doing right now is it's not replacing existing workers. It's just eliminating entry-level roles that require rote, repetitive tasks. But the experienced workers passed through these entry-level jobs on their way to becoming senior members. So we're burning the bottom rung of every career ladder. And the long-term damage of a generation that can't get their first job in their chosen field is going to be somewhat enormous. And it won't show up in macro data almost immediately, but it's definitely going to be a consequence that we'd probably have to deal with in the future. And there's also a counter argument, and I think it's valid somewhat, but incomplete. It's that every major technological transition in history has always created more jobs than it's destroyed. Look at the agricultural revolution, and that didn't create mass unemployment. The industrial revolution didn't create mass unemployment. And the internet didn't create mass unemployment. It created Amazon, Google, Facebook, and an entire new category of work that didn't exist before. And the AI transition will probably follow the same pattern, but probably and eventually are cold comforts if you're 23 and you're trying to get your first job in a field where AI is doing the work that used to justify hiring you. But there's also a serious argument here that whatever jobs AI does replace, it's probably going to create 2-3 folds in some other avenue that we don't necessarily. Look at the creator economy. Did anyone think we'd be spending 8 hours of our lives watching a bunch of people dance around on an app that scrolls vertically? No.
Exactly.
So
I'd
guess
like to add one point as well.
Sure.
To what you just said. It was also like, we also need to think about like the opportunity, right? Like for the first time ever, now it just matters about the quality of your idea. Think of all the people in this world who have amazing ideas, but they might just not have the execution ability. But now that just opens up, right? Like for example, maybe your mother tongue is Sinhala. And then you want to make this big pitch and proposal to a bunch of American investors, and you're worried about whether you'd sound the part or whatever. Now you don't have to worry about it. As long as your idea is solid, you can work with ChatGPT or Claude to get your idea polished in a manner that will communicate really well and get you this investment, right? Similarly, if you want to be a bedroom DJ and you don't know how to DJ, or you want to get like a second opinion on like what clips mesh together, you can get the second opinion, right? Like I spend a lot of my time, like things I previously thought, like, you know what, that's the barrier to entry is too high. I'm starting to do now because I feel like I can talk to these AI agents to kind of like mitigate my reservations or skill gaps and just kind of take the plunge. And because of that, I feel like I'm living a life that I'm more excited about.
Another point that might just be a personal point that I've noticed is how much bandwidth AI just frees up for you. It's incredible. Because let me give you an example, right? When I use, and I spoke about this in my last podcast episode too, but when I used to make podcasts back in 2021, it was tedious and long. Now I'm running recording software on both of our devices. It'll upload to the cloud. I have XLR cables running and Rode mics plugged in, and I am making audio file settings, and AI is running all of it. It's editing our video as we speak, cutting out all the ums and the buts and the filler words, cutting out all the pauses. I have a software running that will post to every social media account every day, and I just have to upload something once over the weekend. So I'm running 8 different social media accounts for this podcast on the very second episode with a 1-person team. I'm running a Substack, a Medium, a YouTube channel now for the podcast. And all of this takes me 3 hours a week. The whole thing.
Damn.
And this is on top of a full-time job with administrative and executive work coming in from 4 different factories, which I can also outsource to AI with demand forecasting, accounting analysis. I don't have to sit there and read through 120 pages of an audit anymore because I can upload 3 of the statements, know what it means, and have it analyzed too. The charts get propped up. I can make a complete ratio analysis on my on Gemini through Google Worksheets, and I can take it to a meeting and present it at the level that an investment banker would have had to spend 3, 4, 5 days preparing. And that's what's crazy about this, because you can now concurrently run a whole production studio while managing a supply chain business and have side gigs in agriculture and hospitality and still have time to meet your friends in the weekend. And I think that's
It's
the best
crazy.
part about AI, because more than anything, it gives you time to actually live your life and actually pursue everything at the same time all at once.
Yeah, 100%, dude. And it's quite crazy, right? Like the ability to outsource a lot of the menial tasks in your life for like $50 a month or $100 a month. That's so much cheaper than hiring like a PA, for example, right? And
100%.
the time benefits you get. Sure, there's a little bit of legwork at the beginning where it's like you got to teach the system your preferences and test out skills. But once it locks in, and mind you, if you use this every day for like a week, it'll start to lock in. Life's literally on autopilot. Like I don't even remember the last time I checked an email from my inbox.
That's exactly what I was going to ask you. Do you even read a whole email anymore? I just read AI summaries.
No, I got this scheduled cron job on Claude Cowork that pulls in all my emails from all my different inboxes and then identifies which ones are high stakes and then replies to them, because it typically knows what my preferences are, but for things it doesn't, it pings me. I get like a notification on my computer and then I just go back and double check. But that stuff's on autopilot. That I'm thinking of ways to kind of automate my PhD now. So doing lit reviews and stuff, like just let the computer do it, and I just kind of like sign off on things and see how it goes. But it's kind of crazy where we're at right now.
Yeah, and I think all of this extra bandwidth that we've now gained because of AI is going to effectively be directed into something else of productive use. And I think that productivity gain is completely underestimated and is going to propel a lot of industries, a lot of individuals. Let's move on to the hot topic right now. SpaceX, the big IPO, the frontier economies, and something that should be talked about way more and is probably a bigger job risk than AI, which is robotics. Would you like me to tee off with the numbers and set you up for some technical analysis?
Yeah,
all right.
Sounds like a plan.
Let's look at the numbers. SpaceX files with the SEC and targets a valuation between $1.75 and $2 trillion. The company was valued at $800 billion in December, I believe, and it's essentially doubled in months after the merger with XAI. The target raise is approximately $75 billion, but from the recent Figma fiasco, I think the valuation might come out significantly higher given how much public interest there is towards the SpaceX IPO. And this IPO would officially become the largest initial public offering in the history of the financial markets, surpassing Aramco in 2019. And let's be honest here, SpaceX's actual financial engine is Starlink, right? It's generating almost $12 billion in revenue with 60% margin. At a $2 trillion valuation, SpaceX is trading at approximately 125 times its revenue. Now, 125 times revenue has no public market comparable at that scale. And the question you have to answer before you can evaluate whether the valuation is reasonable is, what are you actually buying? Because if you're buying the launch business and the satellite internet business, the valuation almost makes no sense and it's impossible to defend. But if you're buying into the only company on the planet with the vertical integration to put orbital data centers in space, power them with unlimited solar energy outside the constraints of earthbound power grids and material constraints and politics, and the only company that's actually made rocket launches economically viable, you're buying something that has no historical comparable. And maybe the market is right to price it at a multiple that looks insane through a conventional lens. Because here's the strategic point about the IPO landscape that I think is underappreciated. And it's that when SpaceX goes public at $2 trillion, it's almost immediately within 15 days, which I think is the timeline, will get added to the NASDAQ, almost certainly. And it's going to absorb an insane amount of capital that would have otherwise flown into other investments and public markets. And I think the first frontier economy is going to completely change how capital markets function and how they operate as a whole. Because after SpaceX is OpenAI with $1 trillion, Anthropic, that's probably going to come in at $800 billion. And as these trillion-dollar frontier economy valuations start to appear, the S&P 500 is essentially going to skew heavily towards the S&P 20. And everyone's going to abandon index funds and commodities and treasury bills to invest in these halo blue chip companies that recently have been a better hedge than gold or Bitcoin have proven to be. And I think this change in the investment landscape, especially with AI making the actual investing process significantly more asymmetric in regards to information, is going to almost change how market dynamics work and how capital gains are made within equities. What's your take on this?
Yeah, this is like the first time ever that the private markets are willing to underwrite 10 to 20 year infrastructure bets, and bets of this magnitude, right? Like if you think about it, I was also doing a little bit of digging on the numbers actually to kind of figure out what's happening out here, right? So Starlink is projected to grow from $20 billion revenue to $20 billion, 10 million plus subscribers growing globally, and 60% plus EBITDA margins. That's one of the stronger parts, right? But then the weaker parts is actually XAI, right? Like they're burning $1 billion a month, but their revenue is minimal. So this bet here, like working out, is based off of three moving components working together, where you have orbital data centers working, the cost to get a Starship to orbit dropping, and having XAI be a model that competes with Claude and OpenAI and Gemini, right? Like if you just run the numbers to have 125x revenue, you're betting that Starship to orbit cost will at least drop by 10x. And when these drop within the 10, 20 years, you'll have data centers that work and can beam that level of frequency of data and sustainably, reliably be up there. And also XAI being one of the three primary AI providers, which is crazy to think about, right? But it's also the first time where I think people are willing to bet that such crazy probabilities being able to work out. I mean, there's obviously that Elon Musk premium, right? Like everyone's like, oh, it's Elon Musk. He has a history of doing XYZ. Therefore, him being at the helm of the company signals such a high valuation. But it's an interesting space to be. And I really love your take on how, you know, like now these index funds are just going to collapse to smaller buckets because how much capital infusion is going to happen. But I mean, going back to first principles and fundamentals, right? Like think of it just like a decade or so ago, right? Like being a unicorn company, how rare it is. And now being a unicorn company is like, cool. Like if you're like the top 10%, top 20%, you got to be a unicorn company with $1 billion valuation. And think of all the companies right now that just raise unicorn level valuations at Series A. What I'm trying to say is that give it enough time, these $1 trillion market caps and whatever will also start stabilizing. And as long as you hold on long enough, and if you diversify and keep investing, you'll rake in the premiums. As long as you're not looking to cash out real quick, everything will adjust and you'll generally come out on top.
But do you think there is enough oxygen when it comes to capital within the stock markets to actually fund all of these IPOs? Because think about it, we have $3 or $4 trillion companies IPOing this year. Do you realistically see $4 trillion entering the market, or do you see it more of a reallocation from all of the lesser performing assets being redirected into the newer ones? But that also causes a structural problem of what about these mid-tier companies that now have tanking valuations, not necessarily because they're performing poorly, but simply because someone else is performing significantly better.
Correct. And I think it's going to be more of a reallocation kind of take on it. It's very hard to imagine that there's so much new capital just being infused. But then again, this is also like the survival of the fittest, right? Like kind of like, okay, now this is the equivalent of empires taking over other empires, where now you have these big stakes coming in. But I'm willing to bet that within the next decade or so, it'll start stabilizing. And with these bets, right, like it's easy to imagine that Anthropic and OpenAI and even like Starlink will, if they start expanding and giving enough access to these infra tools, the scale at which the other markets that rely on these infra to make more money will also expand. And eventually we'll get to this point where we'll have more capital coming in and kind of sustain it. And I think I'm generally taking a very optimistic approach to this. But the risk, like you said, on one of these failing is pretty high, and that could honestly result in one of the worst market collapses you could think of. But I mean, if history is to believe, right, like despite all the depressions that come in, if you held your money long enough and you just don't invest on emotion, but rather routine, you'll tend to come out on top.
And let's talk about something that's not necessarily given as much attention as it should be. And I think I'm more at the nexus of this simply because of the manufacturing work I do, which is Industry 4.0 and robotics as a whole. It's almost shocking to me that robotics is the sleeper in this conversation. And the economic case for physical robots is better now than it's ever been, right? We have Boston Dynamics, we have Tesla's Optimus program, and the combination of hardware, better battery technology, AI-driven control systems means we're closer to general purpose physical robots than at any point in history. And these are repetitive tasks, especially within factories. And I think SpaceX's ambitions, which include deploying AI computing capacity from orbit is nearer, especially when you consider the robotics element. And when you start to factor in the recent moon launch and this escalating space race to get bases on the moon, most importantly because it's a very critical mining site. And if humans do develop the capacity to get minerals and building materials out of the moon for chips, processors, GPUs, as we spoke about before, the cost of GPUs and compute is going to go to zero, just like other infrastructure. And with robotics essentially taking a more prominent role in terms of mechanization within manufacturing, I think within the next 10 to 20 years, physical industry 4.0 integration may be a higher cause of unemployment and worker displacement than AI might be. Because as far as I can tell, AI right now is merely a threat to knowledge workers. But with physical robotics, I think we start to approach the area where AI assisted robotics starts to replace the bigger parts of the labor force, which will more detrimentally affect non-farm payrolls. And that is physical labor, factory workers, manufacturing plants out of China, India, Sri Lanka, Vietnam that are so labor intensive right now that are going to start to transition to capital intensive methods just to keep up with the cost reductions that are going to come from all of the efficiency gains on the administrative side of AI. And furthermore, if the space frontier does take off and we do get compute going to zero and mineral availability and material availability and energy availability becoming so abundant that the problem is non-existent, I think the eventual cost of manufacturing is going to be so low that the human aspect of manufacturing is going to be the biggest burden to most companies, and they'll be one of the first larger impacts of robotics and AI to the workforce that we're going to see in the foreseeable future. Obviously, like I said before, integration takes decades, and it's not going to happen tomorrow. It's not going to happen in 5 years. But I do see a long-term horizon where most factories get operated 90% by robotics and AI-enabled machinery that is more versatile than just simply dumb machines with an excessive labor force.
Yeah. And I guess my take on that is I think the horizon in which it'll happen would be a little bit longer than people would expect. So when you take the robotics stack, I guess the key components would be the hardware, the actual robot, networking and transport communication layer. That's what my startup works on. And then the third would be processing. So that would be AI models and understanding the world and whatnot. By large, that is the three I would consider. We're at a point now where we have robotic platforms. So the hardware, I think, is pretty high quality and relatively affordable for what they are. Korea and China make really great platforms that you can buy. Like, for example, you can buy a quadruped four-legged dog from a robotics manufacturer for around $10,000. And mind you, there's a robot that can run as long as you keep changing the battery pack. Like, you can get it to work for as long as you want. The problem that now people are facing is the communication layer, right? So for these robots to be useful, they need to work as close to real time as possible. What that means is when it gets a bit of information, it needs to be able to process it and then provide an action for the robot to carry out in response to that. So on the communication front, unfortunately, you would assume it's instant, right? Like, let's, for example, if you have a camera that's outputting an image every second, between the next image coming, you have 1 second buffer time to take the image, process it, come up with a plan, and execute on that plan before the new information comes, where that old information becomes irrelevant. But the transport layer, depending on where you need to get that, whether you need to send that image from that sensor to a computer that's on the robot, or you need to send it via a network to a more powerful computer, that eats up time. So now you might spend close to 0.2 seconds to 0.3 seconds moving this image one way, and then for the process data to come back another 0.2 seconds. So that's 0.4 seconds gone. Now you only have 0.6 seconds to process this information. So now you have less bandwidth, less of a time period to process. So you end up having less complex models to be able to compute at that time. But if you can build a system where now you're minimizing the time spent on transport, you have all this extra time now with the existing hardware to run better models and come up with complex, much better thought processes. Now, that part is being actively worked on, and there are different ways of doing it. And that, I think, will get sorted out in relatively near future, within like the 5 to 10 year time horizon, depending on the new network standards, wireless standards, whatever. And companies like us that are constantly optimizing this transport layer will get it to a point where that'll get fixed first. Now comes the third component, the processing and the application layer, where you have to send this information and come up with models that make these decisions. Now that gets tough, right? Like, I'll give you a great example. So manipulators, so let's say you have a gripper on a robot. Like when you see this cup, as a human, if I tell you, please pick up that cup, instinctively, like you're not thinking, you're not like, I need to find a place with a protrusion. Oh, there's a protrusion. I can probably put my gripper fingers through it, grab it, and then push it up. I'm not thinking that. I look at a cup and I'm like, instinctively, I'm like, yeah, I'm gonna grab it with the handle. But the thing is, we are processing on such a subconscious level where we didn't think about it. So we have to train and teach a machine that what we find so natural, we need to teach it these rules to be like, actually, no, you need to you need to find a protrusion so you can grip it and whatever. That's a big problem. How do you take something that is so inherently subconscious that you're not aware of you doing it, and if you have no awareness of how you're doing it, how do you become aware enough to quantify that and put it in a program? That's a tough problem. Second thing is, because we are processing things at such high bandwidth with so many heuristics, that we don't even think of all the senses that we have, right? Like if I hold this cup, like I have a lot of different types of sensation that I can get. Pressure, I can feel the texture of the thing, I can feel if the mug is slipping, and I can instinctively correct for it. But we haven't mapped out these sensors to actual hardware. Like it might become too costly for us to equip a gripper with those kind of sensors to be able to track and detect slippage and texture, or like visually see what it is. So because of that, because the sensors can be really expensive, a lot of roboticists default to using cameras or LiDAR or radar, which are generally cheap forms of getting input data. But that means now you have to think outside of the box. So I have to now figure out a way to do this task with less sensor input than I do as a human, whilst also not fully understanding why I do a thing the way I do it. Now I need to look at a machine that has less sensors, and I have to teach it how to do it. But you get stuck in this chicken and egg problem where you don't have enough fidelity and enough understanding of us as a human to be able to translate that to a machine who's fundamentally designed to follow instructions to a T. And that's why it'll fall apart. And those components of it is what will make the adoption process and the proliferation of robotics being much longer than people would expect. And obviously, the scale at which this happens, depending on how easy the task is, right? Like the easier tasks will get replaced first, and more complex tasks like welding, for example, or soldering or whatever, like those might get much harder.
So the point is that it is a more complex task when it comes to general tasks than it is when it comes to relatively straightforward and replicatable tasks, but it's also on a large enough horizon that it isn't necessarily an immediate threat to most jobs, but probably a long-term worry to keep in the back of your mind.
Yeah, like you said, the general purpose replacement is that risk is that's very far out. Like a very specialist job that can be taken over, but even then, that process of being replaced is going to be small. Like, the chances are, if you're already working on a factory floor doing something that's relatively detailed and requires you to swap your task quite often, it's probably going to be safe. And it'll be a decade or two out before we even start seeing proper, like, fully autonomous assembly factory lines be more proliferated, right? The only places we really see them right now is like chip fabbing, or any place that requires sterility, or have like a clean room or of that sort. But
yeah, let's talk about quantum computing, but not necessarily the qubit technology and all of that science that just goes right over my head, but more so the encryption problem and how that is a threat that is essentially more imminent than even AI, if we can call it that. So maybe a little bit of context for people on what exactly encryption is and why exactly it's important is that everything we do digitally, everything on your phone, laptop is protected by encryption built on mathematical problems that classical computers can't just solve. The two most important ones are RSA, which protect banking, government communication, and everything HTTPS related, and the elliptic curve cryptography, which is what secures Bitcoin and Ethereum and other blockchain financial systems. These work because these encryption systems factor enormous prime numbers, and a classical computer just wouldn't be able to do it. And the problem is quantum computers, using an algorithm, can solve these problems in minutes. The moment a sufficiently powerful quantum computer exists, every piece of encryption protecting the global digital infrastructure is, in principle, exposed. And here's the part that changed dramatically in the last few months. The quantum resources needed to break modern encryption have dropped by an order of magnitude since, I believe, 2025. And what was once an estimated 20 million qubits now requires fewer than 1 million qubits to crack RSA. And Google's quantum AI team released a study showing that a quantum computer with fewer than 500,000 physical qubits may be able to crack Bitcoin and Ethereum's encryption in a couple of minutes. So the race to build post-quantum cryptography has started, and new encryption standards that are resistant to quantum attacks is genuinely one of the most important yet least covered technology. And what's fascinating to me is that there are reports of people collecting encrypted data so that when this does happen and encryption does become less of a protectionary measure, they can then break the data to exploit it.
Yeah, it's so crazy to think, right? Like, essentially, and the fact, I guess, like, most people need to think about is, like, a lot of these secrets or personal information or whatnot, or government secrets or whatever, these are probably secrets that they want to keep secret for as long as they possibly can. Probably not the next 10 years, right? Like, imagine if you were able to, I don't know, figure out America's entire weapon infrastructure in the next 10 years if you just take all the encrypted data and hoard it, which is crazy to think about. But it is the reality, right? Like, Cloudflare, for example, moved their migration deadline from 2034 to 2029. So they already sped that up by 5 years. But it is something that people need to seriously think about, right? Like, people keep hearing quantum computing, and it's like, it's always going to happen. Like, for the last 30 years, every year, it's like, yeah, within the next decade, we're going to see it. We're going to see it. But for the first time in forever, we actually have evidence to prove that it's actually here and that we really need to think about it. And this massive need to migrate encrypted data it's closer on the horizon, right? And we might essentially face the millennium story all over again within the next 5 to 10 years, where it's like, okay, cool, all this information, and we historically know how hard it is for governments to migrate to new technology, or like the pain that is relived when you're trying to move entire continents worth of infrastructure to use these new processes, right? The adoption rate's going to be slow, but we will deal with like probably one of the very similar to the millennium crash back in when 1999 became 2000 and all the computers just crashed because they just didn't have a system to account for the 2 zeros coming as the year. And we're going to face something very similar. And the funny thing though is that like I've been reading that there are standards for post-quantum cryptography ready. It's just, are we able to convince the people that need to be convinced in time that this is a real fear and that people need to hop on it as soon as possible? And it's one of those things where it's like, it's about national security. So what's the best way to secure national security is not to talk about the fact that there's a national security crisis. So no one's like trying to dig it up. So we really have to see what will unfold in the next 5 to 10 years.
And for the people that were listening that have no idea what any of that jargon meant, Skynet is coming and your group chat's about to be exposed. But
you better run. All those jokes with the homies are about to get you canceled.
Anyway, to wrap up this now 2-hour podcast, when I started, I thought these episodes were going to be maybe 30 minutes, but I've made 2 episodes now and they're all 2.5 hours. So to wrap up, I wanted to talk about something a little less existential, a little less tech related, but more business related. And that's this sudden surge in founder and operator led marketing where every CEO now has a podcast. Every recruiter is now my biggest spammer on LinkedIn. Every entrepreneur that sells to the mass markets now has a TikTok account and is dishing out advice. So we see this huge shift even with companies like OpenAI buying, I'm not sure what the name of the podcast is, but a very reputable tech podcast out of Silicon Valley. And is this also, do you think, a drive to find the storytellers, control the narratives, to essentially have a say in structuring the information that is prevalent and necessary for an operator to control, or do you think this is more just marketing to sell more of their products?
I think this is one of those fundamental shifts I was talking about earlier, right? Writing code and engineering good software solutions is commoditized. The best analogy I can give is running a SaaS business now is the same as running a clothing line or a clothing company. Everyone can make really high quality t-shirts. They can find the right manufacturers. Arguably, what's the difference between Adidas and Nike? Material wise, probably the same. But what you do buy is the story. Do you resonate with Nike or do you resonate with Adidas? And then what you choose is just the brand narrative that you align with, right? So software has come to a point where we really need to understand the fact that people buy from people, even software. So they want to feel like they're involved in that process of helping decide the features, feel like they're being heard, feel like they support the founder's conviction and whatnot. And that's what AI has done. It's fundamentally shift decades of what used to be fundraising and moats in software. Now it became distribution and storytelling. And storytelling is how you capture that distribution. And A16Z, for example, straight up now they just hire media personalities to be partners because they feel like as long as you can understand which of these founders can captivate an audience, because of AI, you are probably going to change your solution so many times there'll be other people who are able to copy your solutions. Your moat now is, can you tell a damn good story that'll keep people wanting to come back to you, even though you are the 19th AI app of the week?
On another note, A16Z, hire me. I've been applying for 2 years now. Come on.
You gotta get a boy up there.
I am 23, so it's not like they're very keen on hiring 23-year-olds into A16Z, but just putting it out there in case anyone watches.
You never know. You never know.
All right. Well, that's all of the notes I have for this episode. Is there anything you'd like to end on? Any scary thoughts you'd like to put in someone's head to make sure they stay vigilant with all of this technology coming to displace them?
Yeah, I think outside of Silicon Valley, I think people severely underestimate, like, give you context. Like, if you go to New York and you just like sit down with a bunch of your friends and talk, like AI, people are talking about AI like almost as if it's text complete or grammar check. I'm exaggerating, but what I'm trying to say is that the people are kind of sleeping on the fact on how quickly this is evolving. Like, think of all the content creators that were AI LLM based that started like 2-3 years ago, maybe 2 years ago, approaching 1 million subscribers on YouTube. Think of all the changes that happen. As somebody in the field and like in the heart of Silicon Valley, I constantly feel like I am too late to the party. So my wise words for y'all is hop on X, follow as many people as you can, and try it out for yourselves, because this is the first time ever where we have technology where you can chat with to identify how it can help you. So just be eternally curious, always just see what's happening, and don't be afraid to try it out. And hopefully you learn something and automate a part of your life and start building taste and thinking about process and system design as a whole, so you can actually start productizing and making money in this new AI economy that we're just about to enter.
Yeah, well, that was pretty good, and thank you for that. I already feel the pressure of not necessarily being in the right geographical area, and now I feel it more, and probably running out of time and need to hop on a flight really soon.
Come through, bro. I got you. If you're
The
coming
problem-
on SF,
Yeah, the real problem
you.
is the visa, because I can just show up with a tourist visa, but I can't work. I'd need an O1, an EB1, something like that. And yeah, the immigration policies are not very friendly right now. So we'll see how it goes.
Yeah.
Anyway, thank you for spending 2 hours with me. And
Of course.
obviously this is a very insightful chat, and I'm sure a lot of people are going to learn a lot from it. We'll see how it goes.
Nice.
But yeah, hopefully I'll be over on that side of the world soon, maybe for a Super Bowl game or something.
Let me know. You always have a place to crash if you're coming down here.
For sure. And you have no idea how envious and jealous I am that you got to go to Coachella this year for that particular lineup.
Dude, it was so good, bro. I had a time of my life. Justin Bieber was insane, bro.
Yeah. But no one really tells you about how for the next week you're sick and you're coming down from this episode of like perpetual excitement, and you just feel like your life is just depressing.
Oh my God. Dude, that month was insane, bro. I was at Ultra the weekend or 2 weekends prior. So I was in Miami.
In Vegas?
Did Ultra. No, it was in Miami.
Okay.
Ultra. So I was there for 3 days, came back, then I went to Coachella. Dude, this year has been insane. I've been going out like every weekend. I saw Peggy Goo. I saw Louis the Child. I saw Loud Luxury. Damn, bro. It's insane. I'm going to London next week. I'm going to be gone for 2 months, and then that's going to be kind of crazy.
Is this for work or more of a holiday?
PhD/work. I need to onboard a bunch of robotics companies in the UK, and I also need to touch base so I can actually graduate next year.
Fair enough. Also, can we all just stop making it seem like London is so great? Because I agree
with you. I'm 100% on that.
London sucks. Why do people want to live there? And they compare it to LA or New York and claim it's better. They have no idea what they're talking about.
London's a beautiful city, but it's hard to live there with a British salary. I feel like you need to make American money and go and live in London. And when you're in London, you have to be quite, I don't know, you need to have like certain tastes. Like you got to like plays a lot. Like plays are much more affordable. Like Broadway shows are way more affordable in London, and that's more fun to do. Whereas like if you like, I don't know, R&B and rap and like going to like festivals, like the UK doesn't really cater to that besides Glastonbury and like Bloodfest or whatever else. Yeah, dude, it is a different tier. 100%.
The weather, I don't even want to get started. But also everyone loves to throw the security reasons in my face going, oh, when you're in the US.
It's so much worse in London. What do you mean? I can't wear a watch in London without my hand being chopped off.
I lived in LA for 3 years. Not once, not one time have I been threatened or even seen a weapon. But every single one of my friends that went to London either got mugged, beaten up, were in some sort of
Phone
risky
stolen.
position. You can't wear watches. You can't have a phone out in your hand because someone's going to come grab it off. You can't have a Porsche because they're going to rip out your headlights.
Yeah, that's crazy. Or the spare wheel of a G-Wagon. They literally just take that and run, which is crazy to think about.
But yeah, well, enjoy the last few months of Oxford and have fun in Silicon Valley. And the first chance I do get to hop on the tech train and make the move, I will take it.
Yes, let me know. And if you want to apply to YC, let me know. I can help you out with referrals and stuff.
Do I need to have an MVP ready or some kind of concept with product market fit ready to show them? Or
I think, so I actually have some advice on this now in the AI age. So Gary Tan has a bunch of skills called the G-Stack. I would download them and then use it with Claude Code. And then essentially you talk your idea with it and it'll come up with a plan for you to follow. And what happens is G-Stack will tell you if your idea is good enough for YC, and they'll be like, I think I really like the way you think about this problem, yada, yada, you should apply to YC. And I will generate this file that you should upload with your YC application or bring to your interview or something. So like that can be your way to proxy and identify what the problem is. But now I 100% think you should have an MVP because like just given how easy it is to code and build.
Fair enough.
And now it's also good. You don't have to be super technical. You don't need to have an engineering background. Like now they just take anyone in who has taste. But you're also very well primed to, I think it's a great idea because like YC is on this hell-bent task of trying to automate back office processes. And this sounds ideal. You're uniquely positioned to try it out for yourself and be like, look, I have an enterprise pilot with this company, and be like, oh, cool, it works. And see like you're connected in Sri Lanka to put it to one or two other people. And obviously you can, with those credentials and where you studied for your undergrad and the timing of it all, I think it's very easy for you to get in. So I'd be excited about this.
I thought the MBA was going to be the path of entry for me. Get in through one of the investor programs, get introduced to a couple of these people, because I'm not necessarily skilled with code or the technical side of things. Mine is more operation and business expertise. So I'd probably need a co-founder. Yeah.
But like now you're at a point where you could just honestly just Claude Code the whole thing.
Just do it. Yeah. Because this was something I've been thinking about for over 2 years. And at that time, it wasn't really possible. Even the podcasting wasn't possible 2 years ago, but now I can do it within an hour. So we'll see how it goes. Because this is definitely a path I want to start pursuing, and concurrently to an MBA. So that way, if I get an F1 and get in early, and I can wait out with an OPT.
The F1 process. The F1 process is also kind of okay. So my co-founder, right? He's an F1 student at MIT doing his PhD. So he got into this, and then because he can't technically, there was some technicality where he was not allowed to get paid for his work because he was on F1 visa or own the company or something like that. I forget. And then so the lawyers told him to swap over to O1. So he swapped over to an O1 visa. But because he's an O1 visa now and not an F1 student, he no longer is eligible for his scholarships at MIT. So he has to pay out of pocket to stay in school, which I thought was crazy. But
yeah, people don't realize how intense immigration and that whole process is for an international student or an international worker, because it's one of those things that just, it feels like it's almost set up against you, and navigating it is just a tedious, long, monotonous process.
But yeah, it's definitely getting harder, not easier.
Yeah, for sure. Anyways, thank you for coming on, Raveen. I'll send you the links when I post them. Go out like throughout the week, but the episode will probably go out Sunday or